Morning, everybody. How are we all doing? Happy Monday. Happy March. New month. We finished. Last month's over. All good. Very good month last month. Hopefully April's as good. March even is as good. Morning, ST. Morning, Soul Trader. Morning, Danny. Morning, Paul. Morning, FT Net. Mark. How are we doing? Virginia. Does anyone use an iPad for RDP in 24? Can't say I've ever tried. Morning, Noob. No. Should work, I guess, shouldn't it? No, it won't work. How do you get RDP on an iPad? It's a Windows application. I don't know. Never tried. That's one for Google. Morning, Sarah. Morning, Brandon. Hope I had a class weekend. I did. I did an escape room this weekend. I didn't manage to escape, but we did an escape room. Really good. Amazing. I was a bit skeptical at first, but they are brilliant. If any of you remember the Crystal Maze, well, it's still on, I think, probably. I don't know. The Crystal Maze, basically. It's just like that. It's great. Morning, it's time. How we doing? Morning, Monkey. Right. Let's have a quick look at what's going on this week. Wrong window. Where is everything gone? So this week, don't want to buy your pen. Obviously, the main thing this week is, are we going to have World War III start? But apart from World War III potentially starting because Trump's an idiot, yeah, this is this week's news. So today is Monday, obviously. We've got CPI for Eurozone coming out. This is orange because we know what they're going to be, really. We've had the French and the German CPI last week, so we kind of know what the CPI is going to be. It may come out different, but we'll see. But shouldn't have too much impact. PMIs we've had the flash PMIs to the manufacturing finals. We kind of know the results for. Again, these are orange, but they do have deviation. They do get adjusted sometimes, so we'll see. Main news today, 3 o'clock, is manufacturing PMIs coming out. That is all we've really got today, so half an hour after market open. Tomorrow morning, we've got the monetary policy meeting minutes for the Australian. We don't think that'll do an awful lot either because we've already had the interest rate decision. Oedo is speaking as usual. Aussie GDP and Swiss CPI on Wednesday. So these are the first two real market movers, I would say, that are coming up. It's non-farm payroll this week, so everything's back-ended. So those are the two first movers this week. And then we've got the services PMI on Wednesday. So that is the other version of the Purchasing Managers Index for service industry rather than manufacturing industry. That's on Wednesday. The biggest news we've got this week is the euro interest rate, which is going down again. So again, potential bearish movement on the euro. We are expecting it to go down. We have been moving into that already. So the market's factored in a drop of 0.25%. There's no reason why we shouldn't get it unless something happens this week with the new Euro alliance that we're having to form because Trump's decided he doesn't like anybody anymore. There may be something that the Eurozone go, do you know what? We're just going to freeze it for the minute because we've got no idea how much money we're going to need to spend. So I don't think that'll happen, but anything can happen at the moment. We've got the Euro Summit as well on Thursday. ECB press conference will guide us through what's going to happen, and then non-farm payroll on Friday. So the unemployment rate for the US and the unemployment rate for the CAD. So it's a busy week. Non-farm payroll week is always a good one, but we've got that interest rate. This is the main thing that could have some deviation this week, but we'll have to wait and see. Weekend news, financial wise, not an awful lot. Obviously, the main news this week is a complete split from NATO, basically, by the US. So we obviously had emergency talks yesterday, all the European countries and the UK, about what we're going to do, because we're obviously not just going to leave Ukraine to just get murdered by Russia. So if US want to do it, fine. We're not in their gang anymore, and they're not in our gang anymore, which is going to affect everything moving forward. if that isn't the case and it all turns around and goes back to what we were going to do, which is do a nice little deal to sort it out, then everything will be fine. But at the moment, it's very, very, very unstable. So if there is any kind of falling out with the US and Europe regarding their current sort of ally status, trade agreements, it's not necessarily we're going to go to war with America or anything stupid like that. But obviously, the trade agreements are going to change dramatically. He's already putting tariffs on everybody. This could escalate the tariffs. He could turn around now and go, you know what, 50% on Europe, screw you. So be prepared for some kind of mental, you know what Trump's like, some kind of mental announcement that basically will drive the markets nuts. So everything else, as usual at the moment, news-wise, is irrelevant because it's all about whether or not Trump is going to upset the markets. So, yeah, very interesting weekend from a political perspective, but from a financial perspective, nothing much has changed. So we'll see what happens with all of that this week. But we've got a fairly busy news week anyway. So, morning, Ace. Yes, you can, but it's hard to drag zones. You're talking about the RDP for iPad, yeah. Morning, Dennis. You guys just carry on talking about RDP amongst yourselves. Morning, Chris. Roger. Barry, morning. Right, so that's the news. So obviously the news this week is weighted more towards midweek to end week. So it really all kicks off on Wednesday. So we'll see what happens today and tomorrow, but nothing particularly exciting unless those PMI figures come out wildly different to the 50.6, which is forecast. Just on a side note, morning, Grateful. Morning, Peter. This weekend, I updated my website. So I'm now selling all my EAs direct and licensing them direct. They are still available on the MQL5 marketplace, but I'm moving away from the marketplace because of all the problems people are having with it. So I take PayPal and cards. So if anybody's having problems with payments, that shouldn't be an issue now. But basically all of the EAs you can now get. Indicators still on the marketplace. Indicators are indicators. So, but the EAs basically are all going to be done via the website now. And I can now do discounts. So if you've got MT4 and MT5, you can have both of them 50% off. Because I can now do discounts. I can do bulk package. I can do what the hell I like. It's brilliant. So yeah, so that's now available on the website. So if you are thinking of buying anything, nobody's bought anything yet. So someone's going to be the guinea pig. I think it all works. Go and have a look. If it works, brilliant. If it doesn't, I'll deal with it. Morning, Terence. I bought everything for MT4 on Friday. Oh, that's fine. No, I'm still on MT4. I'm on the MQL5 marketplace, rather. I'm not removing anything from the marketplace. Yeah. But I'm just doing it direct. So any updates that come out will still be pushed out to the marketplace as long as it lets me, because it is bugged to hell, the marketplace. People have problems with it. I have problems uploading products to it. Some days it goes, yeah, that's fine. And you try it the next day and it goes, don't like it anymore. It's just, I don't know. So doing it myself means I don't have any problems because I'm the only problem, which might be a problem. But anyway, so yeah, so that's available now on the website. Right, let's have a quick look at the markets this morning. DAX is a break long. So if you took the pre-market, let's see what SIH did this morning. So pre-market on the SIH this morning, there was no trade on the pre-market because the range was too tight. But yeah, nice big break there. 5-minute ORB is too big for SIH this morning. And there's a long break on the FTSE. Which is on the pre-market 15. Yeah, so there's a break long on the pre-market 15 on SIH this morning. Very whippy session. Look at the wicks on the FTSE this morning. That's your 5-minute opening range. Your 10-minute candle is that big with a body that tiny, and then we got big old wicks going in. So it's very whippy session this morning for the FTSE. Long on the DAX on ORB V2, no trades on the FTSE yet. So we'll come back to those in a minute. Indices wise, FX wise at the moment, there's no ADRs today. It's a new month, new week. Yeah, so all dashboards reset. There's no ADRs to look at so far today. Nothing's really moved yet. There's no gaps or anything. So I closed out profit on Friday. I made sure I was as flat as I could on Friday, just in case we got some movement over the weekend. But nothing's really gapped anywhere. So nothing particularly exciting to report so far this morning. So Aussie's not really moved during the Asian session. There's no gaps on anything like the Swiss or the yen, which were the ones I thought might get some safe haven movement over the weekend. Euro hasn't been affected by what's gone on so far. There's a bit of a gap there. What was that? Yeah, we got a bit of a gap up on the euro, a little bit. That is quite possibly because we got the interest rates this week, though, rather than what's happened over the weekend. Nothing really moved on the pound. So everything's very stable so far this morning. New Zealand dollar not gone anywhere, and the US dollar slight gap down on the US, but gaps filled anyway. So nothing much has moved over the weekend, which is good. So no real fallout from what Trump did to Zelensky. Morning, everybody else I haven't said morning to. Roger, just remind me, how much do you need in an account to trade the EA? Whatever you want. How much have you got to trade with? I can't answer that question. That's one for you to answer. Kudos on rolling out self-publishing. Yes. I've got a lot of extra work to do now, though, because I'm licensing all the products myself. So it's not automated. I'm issuing licenses. So you have got a little bit of a wait. So if you buy it through me, you get it cheaper. You get support. Yeah, so if something goes wrong during the purchase process, I can help you. Rather than going to MQL5, filling out a form, 48 hours later, them asking you a question. You answer that question within 5 minutes. 48 hours, they come back and go, has it fixed itself yet? Anything else I can help you with? Awful support. I can help you now if things go wrong. But I issue the licenses myself. So obviously there might be an hour or so delay in me actually sending you the product. That's the only downside. But there's a billion upsides. So right. So ADRs, there's nothing to look at today. RSIs, there's nothing to look at today. So Euro odd is RSIs is nothing to look at today. There is some RSIs to look at today. There's no hourly is what I meant. So H1 RSIs, nothing exciting. They were all triggered last week, and they're all starting to play out. So 4 hour wise, we have got some RSI extensions still. So Euro odd is still an opportunity to get in. That's coming to a very nice resistance, which we tapped into on Friday. So you've come up into the previous month's high. So this is last month's high. This is the previous month's high. So we've got a double top high, which we're back at now. So looking for some kind of pullback now on that leg starting. We've got a lovely big 3-bar reversal went in on Friday. So push, pause, pull. And we're within that at the moment. So on the lower time frames, you've had nice reversal alerts on this. Just had another one going this morning. Look, so there's a reverse alert just gone in, new high made. There's your M pattern. This is a multi-day M that's going in at the moment potentially as well. So that looks like a good short if you're not already short on Euro odd. I'm already in it. Euro New Zealand, big extension to the upside. So that's last month's high there. And obviously that's what we just rejected this morning. So again, all these Euro moves and the Aussie and New Zealand moves, very big. So both of those opportunities for shorts. Pound odd, same thing. Nice, good short opportunity there. Pound New Zealand. So it's all about Australia, New Zealand, and starting to reverse these moves. That's the biggest extension we've got at the moment. We looked at this one. You know, the extension we've got. So we actually got a little bit higher than what we looked at originally last week. So 95.6 on the 4 hour full 10 RSI. Yeah, I mean, you just don't get to that level, do you? Just not got to that level before. So huge extension there. We're going to get a mother of all pullbacks on that one very, very shortly, probably starting today. But there's a caveat with everything at the moment. We haven't had a situation where ever in history where the US has turned around and goes, you know what, I fancy Russia over everybody else. What's going to happen this week? I have no idea. But yeah, so basically, how anything that is decided this week by Europe and America will affect financial markets, no one on this planet is going to tell you because it's never happened. So we're in a state of what the hell at the minute. So, you know, indicators indicate what's happened in the past. We're at a precipice of a cliff we've never been at before. So what's going to happen this week? We'll have to wait and see. But anyway, so those are your RSI extensions. We'll go through all the zones. So I'll whiz over to the zone trader account. Let's just quickly see what's going on. So DAX has reversed back down again. FTSE stuck inside bar at the moment. So no movement. Lots of downside wick rejection. So it looks bullish at the minute. But not a lot of movement today, really, at all. Right. So RSI, ADR, no, RSI, H1M5 or M15, whichever you want to do. RSI account is sitting in 3% of drawdown at the moment. This one has only really kicked off in the last couple of weeks because we haven't had any RSI extensions. So banked 1.3% on that on Friday. That was the first bank. As you can see, you haven't really banked anything on this account at all. So it's just starting to kick in now, which is good. So we'll go through all the zones on the zone trader account. We'll have a look at where we need to be. I don't think we got any history showing there for some reason. Don't know why that's turned off. There we go. So that should update. There we go. There's all the history. Yeah, so up 12% on the zone trader account over the last 5 weeks. So pretty much last month did 12%. Got some drawdown on at the moment. It's mainly the New Zealand and Aussie dollar pairs are squeezing at the moment. So as soon as those mean reversions all start to kick in, that will all suddenly flush into profit. So we're just waiting for all that lot at the minute. Did some DD control on Friday. So Euro New Zealand, I closed out one of those Euro New Zealands here. So these are the areas basically at the moment which are the most problematic. So I did a DD control on that using some of the profit on Friday because it was up over 2%. So yeah, did a bit of DD control on Friday, but we'll see how we go with the rest of them. So we'll go through all the zones, have a look at where everything is, set them up, and usual stuff. I would have preferred to give the money directly without commission from MQL5. I find their business practices quite inappropriate at times. Can't say I don't disagree. Been trying to save a bit. I've been thinking of starting with $700. Oh, right. Okay, you're talking about... yeah, I mean, when you say the EA, Roger, I've got a lot of EAs, a lot of strategies on the website. So if you're going to start position trading, $700, forget it. You can't position trade with $700. It's just no point. You can't do anything with it. A minimum 3-5K. I mean, if you want to trade, I mean, to be fair, if you're starting trading with $700, as long as your expectations are no more than $50 to $70 profit a month, that's fine. But that's all you're ever realistically going to make. So if you're looking to turn that $700 into $7,000, you need to go and follow some YouTubers that have got Lamborghinis because it's just not possible. Sorry about that. But anyway, but if you want to do your best bet is to trade indices with $700 because the only way you're really going to make well, I mean, you're not going to make anything with $700. Think about, all I will say is think about what you want to achieve and what you want to make. Yeah. So a professional trader will make somewhere between 10 to 15% a month. Good month, maybe 20% of their revenue. So if you're looking to make 10 grand a month, for example, you've got to have 100 grand in the bank to do that. You can't do it with 5 grand, 2 grand, whatever. You can double an account, you can compound an account. I've done it in here many times. but it's complete gambling, and you will lose it all if you try to continue to do it. So that's the real world. I don't give the sort of information you get on most YouTube channels because I do it for real. They don't. Disappointed with the euro pound. Thought it might be stronger, but in fact, it's relatively weak. Euro pound. Not really doing anything, is it? Euro pound doesn't do anything though, does it? I mean, it's literally, it does this for 99% of its life because it's the euro pound. We're trade partners. There's absolutely no benefit in it being extreme. So it's a very range bound instrument. But at the minute, I think, you know, the only thing you can look at with this at the minute is what's going to happen with Trump. It's either going to do that or that. But it's not really going to be affected massively by anything that happens with this kind of new world order type thing, because as trade partners, we're not going to change anything between Europe and the UK. So it's more likely you're going to see this type of price action with the odd couple of weeks of movement based on an interest rate differential or something like that. Yeah. So, but yeah. True, at least you're being honest. I'm not being honest, Roger. I'm just being realistic. Yeah. I don't know. If someone said, give me £1,000 and I give you 10 grand back, would you do it? If the answer is yes, McDonald's are hiring because you're an idiot. That's all I'll say. I'm not calling you an idiot. I'm just saying anybody that thinks they can make a fortune or make a full-time living with $700, if that was the case, we'd all be millionaires, wouldn't we? We're not. Well, the only people that are millionaires are the people that steal everyone else's money. Trump, Musk. Oh, yeah, hang on a minute. There's a list of them, aren't they? They all pretty much run the American government at the moment. Anyway, we won't talk about politics. Let's look at the zones. Right, Aussie dollar CAD. So Aussie dollar CAD for second long taken on Friday. Yes, it worked. I fixed the bug in the Zone Trader EA. So the last update of the Zone Trader EA, the weekly lines were being drawn on the wrong day. I told it to draw them on Mondays. So what it did, it said, hey, it's Monday. Guess what? I'll draw it on Fridays. So yeah, that's fixed. So this is now actually the start of the week. So Friday we took second trade on that one. So third entry down at the lows. Very easy one, this one. So that's next entry going in down there. I'm just going to move that down a little bit to make sure we get it on. So if necessary, if we do drop down further today, we'll be getting third entry on that one. Exit, still like the upside on that one in the propulsion gap. There's a couple of extra targets up there, but I'll see how we go this week on that one. Aussie dollar Swiss, new long taken, so need a new entry on that one. That's 4 long now. Going to have to go out a little bit to find a decent zone on this. So next entry on that one, is that a bit close? So we've got these lows down here, which we re-tapped into. So potentially down there is next entry on that. But this Australian dollar really needs to liven itself up a little bit. So next entry long on that one. I'm just going to move the target zone down into that propulsion gap. So this is kind of the greedy zone, if you like. We are range bound on this, and if we stay range bound, we'll see. But that's the kind of easiest target to get to at the moment. Aussie dollar, New Zealand dollar, shorts, second entry in propulsion, target down to the lows. Nothing's changed on that one. Euro US dollar, second entry long. So third entry will be... So this is getting tricky now because we've got this Trump V-shaped recovery, which we've got to kind of ignore because it wasn't real. This is the Canadian tariff announcement, which wasn't real. So this is the previous balance that the market was in, which we broke out to the upside and re-added to. We re-added multiple times what was going to happen there before the Trump move looks like more adding and longs. So I'm in at the previous areas of balance already. So next entry long is quite tricky. So this would be where I would potentially look. I mean, we just happen to re-tap into that area after that Trump announcement. However, yeah, I mean, that really is the only level I can see that makes logical sense to get in. So I'm going to pick that. This low here is going to be the next entry. So if I do need 4, it'll be there. If I need 4 down here, that is going to be such a massive pullback. It's going to be a lovely massive profit, and I'll probably leave my target intact there, even if I do get 4 on. So we'll see what happens this week. Obviously, anything can happen with this US this week, so we'll see what happens. CAD Swiss hasn't gone, it didn't go anywhere all last week, so still in 3. Targets all in the same place, backup zones in the same place. Shorts didn't quite get that fourth short on this morning, didn't get there. We kind of tapped it Friday but didn't get an entry, so yeah, just waiting for the pullback on this. I'm just going to move the target up into that propulsion gap. I think I was kind of hope I really wanted to get that other position on, but it didn't manage to get me in. We closed below the zone, basically. We did tap the area, but we closed back down below the next sell zone, so I couldn't get a trade on. It's unfortunate, because that would have made that a very nice profit rather than a mediocre profit. But so in case we are going to start to break out to the upside for some reason on the euro, can't see why, but yeah, I'm just going to move the zone up for an exit. Euro CAD zones are still in place, right? So I'm just going to adjust this next sell zone to last week's high. So if we do come up and retest last week's high, excuse me, which is not far off the previous target I had, that will be my 4th short on it. And then target will come back down into that propulsion gap. At the moment, I'm assuming we're going to put in a lower high and we're going to come down and retest those lows. Euro Swiss have buys on. It's dropping quite dramatically this morning, isn't it? So next entry on that one is, I'm going to readjust that to last week's low now, wherever it was. Last week's low is much more attractive. So I'm hoping we're just going to hold propulsion again if it tests that area, and then we'll go for a run. But yeah, next entry, last week's low. Exit target to the upside. Ah, right. Okay, sorry. I was just looking at this thinking, why is my target so close to my average? So this is part of what I did on Friday. I took that partial profit off to do some DD control. So this next entry will now be adding that back on again. However, because now that trade isn't on, obviously my average price has jumped up. So I need to adjust my target now to a more logical area. So I'll put target up in that propulsion gap there. Euro pound. Looking for shorts. Can't get in at the moment on this. So I've been trying to get into shorts on it, but I just can't after the last exit. So for 2 exits on this one. So I had that short there and that short there. Can't get in short in a minute. I'm just going to leave it where it is for the moment. It's this area here, basically, is what I'm looking to get retested. But yeah, I can't get in. Euro New Zealand. That's the drawdown control that I did there. Okay, so that's the drawdown control from Friday. New entry taken on that one. So need a new short target to the downside. I will move to propulsion. So next entry on that is that high. So yeah, looking for them to come and retest that previous high. It's coming down this morning, the euro. So hopefully this is just the start of that pullback down again. But yeah, target to the downside just moved up to propulsion because we have adjusted the average price basically. So this is now a profitable target. The average was down here somewhere before, which is why we were looking for targets down the lows. So yeah, that looks pretty good. Euro US dollar got out of the shorts last week. Looking to get new shorts on. Let me just take those targets off. So obvious place for a short is propulsion. So let's see if we can get a move up into here. Again, just got to be a bit careful this week because we don't know what's going on with Trump and Europe. So, but yeah, looking for some kind of short entry on this at the moment. Swap's too expensive to go long, and then we'll see where we go. I'll go through the pounds in a sec. Let me just catch up on chat. Many professional traders out there who would disagree with a sustainable 10% a month being possible. Why? One option trader, that's options, that's investing, that's not trading, that's investing. It's a totally different thing. Follow makes around 15% with options. Yeah, options is different though. That's invested. There's a big difference between trading and investing. If you're going to invest, I can make, well, I don't know. I don't know what I can make investing because I don't do it. But investing is a totally different vehicle. If I had 100 grand and I put into an investment account where it was never touched and it was job was continuous growth, you can outperform the stock market quite easily. Look at what Warren Buffett does all the time. Yeah, anyone can outperform the S&P because all you do is you buy every dip in the S&P, and by default you will outperform it because you will have more size than the S&P on. It's not hard to make money with options because options are kind of an investment vehicle. But investment strategies tend to be much lower risk. So you're not looking for 5 or 10% return. You're looking for an annual return which outperforms the stock market, which is 8%. So anything over 8% with an investment vehicle in options is bloody good. That's why it's so easy to make money. You look at companies like Axe Capital in billions. I know it's fictitious, but any capital management firm or investment firm that manages pension funds and things like that, their job is to outperform the stock market. You could sneeze basically and make more than 8% a month, a year. Yeah. So it's not difficult to do. Like I said, with the S&P, every time the S&P drops for 3 days, if you bought it and you continue to buy it every 3 days if it's dropped, you cannot not make money. There would have been 1 year in the last 2 decades where you'd have lost money. And that was during the bear market we've just gone through. Yeah. So it's a different thing. But making 10% a month on average trading, that's slightly different kettle of fish. I was just trying to find the S&P. Do it on here. There we go. So I've only got back to 2024. So yeah, the 2023 bear market is the only time you would have. I mean, I don't even know if you would have lost money during the S&P bear market. Oh, I have got more data. Hang on. Have I? No, I haven't. Oh, yeah, we go. So that's 2020. Sorry, 2022. 2021, yeah. Got that bear market there. So even if you'd have bought the dips in that, yeah, and held. Don't forget you've got to hold, yeah. So investment, you're not getting in, getting out, getting. That's what trading is. Trading is getting in, getting out, getting in, getting out. Investments is buy and hold. Stock market. If you'd have bought it there in the first dip, roughly around about there, that's where you ended the year. That's the first year in 2 decades. The first year in 2 decades. You haven't made money. Just buying the S&P. All you need is an account large enough to survive the dips, which is the tricky part. Hedged on the FTSE this morning. DAX gap fill is just about to complete. Right, miles away. I drifted then. You can put 700 in a cent account and lean on the ropes. Putting 700 in a cent account is still putting 700 in, isn't it? Doesn't matter if it's a cent account. You're not going to make more money by having a cent account. If you put $700 into a cent account and into a normal account, you've put $700 in. The risk of every trade is the same, except your balance is inflated in a cent account. The $700 would look like $7,000. It's not. It's still $700. Cent accounts are just a way to inflate your account balance, make it look larger than it is, but it doesn't change your account balance. Still $700. If you risk 1% of $700 on that account, it will look like it's risking 1% of $7,000, but you won't. You'll be risking 1% of $700. Same thing. I started watching the show recently because you mentioned them in the bootcamp. Watching the show? Oh, Billions? Yeah. It's brilliant, Billions. Anyway, let's look at the pound. Pound, shorts. I am looking for longs. So, yeah, just hit target, look, everybody. This is the target I set. After I got out of these longs and I got out of that long at that high, I said, right, I want to get in long and we're going to be heading up there. I didn't manage to get in. So that's really annoying. But anyway, I'm still looking for longs. At the moment, I don't really want to get in long right now. So I can't see anywhere in here I want to buy it. It's just a mess. It's in a parabolic trend. You can't buy. I mean, you could buy somewhere in there, maybe. You could buy somewhere in there, maybe. It comes down and retests that low, maybe. So for me, I want to get in on a nice, strong drop long. So at the minute, I don't want to get aggressive. That would be my aggressive entry. So when you look at where we're looking to, where the banks are going to add size, it's going to be there, that more of accumulation. Or there. So we've got that big area there. This is one big propulsion gap. We've got this propulsion gap out of this accumulation break. So, and this is the propulsion gap out of that accumulation break. So it's either going to be here or here. That for me is too aggressive after we've done that much movement. So I would continue to look somewhere down here for an entry long. But I want it to have undone at least 50% of this leg. I want them to take profit on that before I start to think about getting in. So I can't get into it. It's just such a shame. I shouldn't have taken this long off here. But I mean, if you look at, you can see why I took that long off. Yeah, this is what trading is all about, analyzing the market. And one of two things is going to happen when you get to support resistance areas. So I was looking at the target being here. We hit that area and we immediately rejected it. So I took the profit. It happened to break through, retest, and never look back. But it could have easily done that, which is why I took the profit. If you've got the profit, take the profit. That's a lovely trade, but not what I did with it. So unfortunate, but anyway. Pound CAD looking for longs. Again, same thing. So this massive grind we had we suddenly stopped that grind with that accumulation and we broke off. So this is where the order was placed to start that big drive. So they will be adding into that there. So that's what I'm going to do. Pound Swiss, looking for longs again. Might get this on today. So massively range bound at the moment. It's a real mess. All the Swiss franc is always a mess, unfortunately, because it's the Swiss franc. But so last entries were there. One back there. Again, just looking to watch this area here, which we previously rejected, turned into buy zone. So I'm going to carry on buying that until they prove otherwise. If I buy that and then it breaks down, we're coming down into here. So I'll scale in and out on that. But yeah, so might get into that one today. This is Friday's low basically, and this is last week's low. So both of these levels are potential areas that we're going to find more buyers at. Pound US, looking for shorts. Sorry, I'm in short. Next short's going in up at propulsion. Target for me at the moment is a real tricky one on this. So I took this short off on Friday basically to do the drawdown control with. So this was the old target. Now obviously because I've taken that one off, this target is too close to average. It's just not worth getting out there. Could do, but if we can get that trade back on again, would be nice, because this would remain my target zone to the downside. But as we stand at the moment with this position, I'm just going to retarget down down there. So this was the previous accumulation break. We came back up into it, resold it. Sellers got overwhelmed and rebought it, rebought it, rebought it. This is the Trump announcement for Canadian tariffs. Rebought it, rebought it. We tried to break through it, couldn't, rebought it. So this is basically where the buyers are sitting right now in this propulsion gap here. So that makes the logical area to the downside to target. That's quite a big move, which is going to take a good week or so to get to. So that's kind of long-term target. I will play it very much by ear this week and see where we get to, what the portfolio looks like when we're at different levels, and close things out as I kind of see. Because at the minute, it's going to be, I think, a very turbulent week, because we're not going to know what's going on with the European situation. So it's either going to hit that, average is going to jump up, giving me an exit in here, or I'm going to leave the exit down there for the moment and see if we can grind all the way down to there. New Zealand dollar CAD, got two longs on at the moment, third long going on at the lows. If we get there, exit up at those highs. New Zealand dollar Swiss, new entry long needed. Down at the lows. So that being the next entry long. We haven't pulled back on this yet. We had a little flag break, which if that is going to be a flag break, we're going to retest that. We're going to find some buyers down there. Whether there's enough to actually undo this move, I will have to wait and see. But if we hit this zone this week and we get a nice big propulsion move out of that zone, everybody that's short here is going to jump ship and then we'll be off. So I'm hoping, I'd like them to come and try and test this week, rather than just muck about here, because there's no incentive then for the buyers, the sellers to turn into buyers basically. So but yeah, big strong push down. Target for me at the moment is up in this propulsion gap here. That's too obviously close, not going to be an exit. If we do manage to get another position on down here though, the average is going to jump down, so I might take a partial there and then see if we can push up into there. But we are potentially range bound, so we'll see. This New Zealand dollar and Aussie dollar move has got to finish at some point soon. So you know, as soon as we get that move finishing, we'll get the profit take leg, we'll be off. New Zealand US, new long needed. Tricky one again because of the Trump Canadian tariff announcement. It's always difficult when you get some. I remember this from last time he was in. When you get these types of moves, which aren't moves, it's very difficult to tell whether or not the market is going to pay attention to them as highs and lows, because yes, this is the low of that move and the low of the week and the low of the month, but it's not really. It's a knee-jerk reaction which wasn't part of the normal trading models that they're using. So it's difficult to determine whether or not you should be looking at these from a technical perspective or not. That's actually the technical low. This is Trump being an idiot. Yeah. So do you take that into account as a technical analysis perspective, or do you take the actual technical analysis perspective? You can't see it's behind my head, but that's the low. That's the real low. That's the Trump low. So that to me is probably the most logical spot for next entry. We've also got this little high low here. So what I'm going to do is I'm just going to bracket that zone and see what happens when the market comes down and tests those levels. So that's what I'm going to use for next entry long if needed. Upside targets, I can now move into propulsion. So there's the target to the upside. US dollar CAD, looking for longs. Again, got out of the longs here. Just needed out of this. Was in this for pretty much almost 4 weeks. I was looking for this accumulation basically to hold. It did hold, and then eventually we slammed out of it on the news. So looking basically to get in long. But do I want to be long on the US dollar at the moment? Basically, Trump is ripping up the rule book on trade in the world. Is that going to make the dollar strong or weak? No idea. We've never been here before, have we? So logically, that is your new resistance, which will turn support if we're going long US. If we're not, this is where they're going to sell off, and we're going to come back down and retest these lows. So either way, it's probably worth getting into a long. And then obviously we can scale in down here and down here if necessary. But your guess is as good as to mine as whether the dollar is going to be strong or weak moving forward, because it's going to depend on what decisions are made over the next week. US dollar Swiss, looking for longs, can't get in out of the last lot of longs on that one. I mean, again, an aggressive long on this would be in this propulsion gap, which is the previous sellers who flip long. That's where they'll add back in, and then we'll come up and test this area here. But I don't want to be that aggressive on the US at the moment. So I'm just looking sort of somewhere on a 50% retracement of that leg. We are bearish at the moment. But are we bearish, or are we, safe haven runs? It's just this is a bit of a mess to trade at the moment, the US Swiss. So I don't know. Pound yen I got out of on Friday. Yeah, it was my first dip, toe dipped back in the water in the yen, so I got out quick. But anyway, so yeah, I'm out of the yen. I'm not really interested in getting into any more yens at the minute. I still don't know. I just don't know what's going on with the yen. I really don't. So all the yens at the minute are bearish. So the yen is strengthening up nicely after the intervention. It's doing its job. So everything you can see, excuse me, yen wise, you want to be long in it only because the swaps are too expensive to short it long term. So you're trying to find entrance into something that is coming down very hard. It's not really appealing for me to try and get into it. It does look like it's starting to reverse now. However, this could just be a flag, and we're going to continue short. So for me at the minute, I'm just going to steer clear of the yens. Euro yen's probably the best looking thing out there at the moment because it is holding the lows. So we are trying hard to hold this level. So if we get some yen weakness coming through, we'll be off. But if you are going to be worried about anything at the moment, if you look at the fear and greed index at the moment, French PMIs are up, bullish euro. So if you look at the fear and greed index at the moment, we are in extreme fear, which basically means that the Swiss franc and the yen are going to benefit. God, you've got to go back a long way, haven't you? God, look at that. I'm really happy. 1 hour later. We're in extreme fear. So it means basically that the safe haven currencies, Swiss franc, yen, gold, are potentially going to be very, very strong, because if you've got a problem and you're not sure whether you should have any euro holdings, you're not sure whether you should have any pound holdings, you're not sure whether you should have any US holdings, because you've no idea what's going to happen to any of those currencies, you stick it all in the yen and the Swiss, because it's where you put it for safekeeping, which means if you're doing that against all the yen pairs, and that is the new norm, you ain't going to get anywhere. So swaps say I can long it only. Market and brain says you don't want to be long in it. So I'm sticking clear. Swiss franc is, actually euro. I said euro is probably the best of the lot. Swiss franc is the best of the lot. Look at it holding nicely. But why is it holding nicely? Because these are the safe haven currencies. What do you do when you get two strong currencies? You go into a range. That's what it's going to do, isn't it? So, just don't want to touch them at the minute. Pound New Zealand's the only thing I'm not trading because swaps are too high. If I was, though, I'd be shorting the crap out of it. There we go. So that is everything covered. We'll see where we go. So these Aussies are the main thing that are a worry at the minute. Aussies and New Zealand's, hoping that we're going to start to unravel. So there's a lovely reversal gone in on Aussie CAD. Look, reversal alert's gone in. We're retesting at the moment. Good wicks to the downside going in today so far. So we'll see if we can hold today these lows. So what we want to do with all these Aussie and New Zealand pairs is now hold last week's low. If we can hold last week's low, we'll start to unravel. If we start to unravel, it will accelerate and we'll be off. We'll be back up here at some point. But yeah, difficult in a minute. Very tricky with all these. Why is my average line not showing? Oh, my EA is not running. That's why. Oh, because I deleted it. Bear with me a second. Position trader. This is where I found out if my licensing system works, because this is the licensed version of the EA. So this is either going to kick me out and go, you haven't got a licensed version, or it's going to work. It worked. So I was going to say, where's my average? There's my average. So not far away. Don't need to get very far. This is kind of where I would look at to get back to this propulsion gap, because this is where we had that last high put in. We came back to it. We hit it and tested it twice. And then we slammed through and broke that low. That's the propulsion order that made the shorts. So if they're going to hold short and we are going to continue to drop, this is where they'll add into those positions, as they have here. We'll see. Pound odd. Would you not take the short if it triggers? No, because it's too expensive. Just switch. Okay. it's going to cost me $13 to hold it. You could do, yeah. So it's entirely up to you. Look, swaps is. If you'd have asked me this question 6 months ago, I'd have said yes. I mean, 100%. But now, after I've done my analysis at the end of last year, and we looked at the cost of doing business now as a position trader or a swing trader, it's too expensive. I'm not paying $13 to hold a contract short. It's too much. If you ask me if this is coming down, 80% sure, yes. But also, I'm not going to take the risk right now, especially with what's happened this weekend, as to whether or not the pound is going to be bullish or bearish. Commodities are doing well. Australia export commodities. So there's everything saying, yes, this should do that. This should power up. But I'm not going to, I don't need to take that chance. Yeah. If you need to get into some trades, if you've got no exposure on and you really need some pound exposure or you need some Australian exposure, yeah, if you're not in stuff and you haven't got any exposure on, do it. Just know that that's the most expensive trade that you can take at the moment. So not the most expensive, but one of the most expensive trades you can take at the moment, shorting the pound against the Australian or the New Zealand dollar. I don't need any Aussie exposure and I don't need much pound exposure. So I don't need to take that trade. So, but if you do need to get some exposure on, take it. There's nothing wrong with it. You know, I'm not right or wrong about anything. Yeah, what I do with my accounts and my trades is what I do with my accounts and my trades. I have no idea where this is going. No one knows where this is going. The banks don't know where this is going. Nobody on Bloomberg knows where this is going. This is going up or it's going down, and it's going to move through time over the next week and tell you which way it's going. That's all you know, I know, and everyone on the planet knows. Your job is to take a risk. That is a high, expensive risk to take short. From a probability perspective, it's a high probability short. It's likely to work out. But if it doesn't, it's going to cost you a lot of money. What do you want to do? I can't answer the question because I'm not in your situation. I haven't got your portfolio. I haven't got your exposure, and I don't know how much risk you're looking to take on it. You've got to decide. But what you've got to do is when you get into it, if you take it, be under no illusion that if you're sitting in it 6 weeks later, your swap costs in your column on your portfolio manager are going to look hefty. Mine aren't hefty because I'm taking stuff which either costs me very little to hold it for a long period of time, or I'm getting paid to hold it. So, you know, there's a lot of facets to take into account when you're trading. One of them is how much is it going to cost me to do it? It's the cost of doing business. That's an expensive one. But there's nothing wrong with taking an expensive business decision, is there? Yeah. Businesses do it all the time. It doesn't kill them. They might not just make much profit on it. Yeah. All you're doing when you're trading in against swaps, all you're doing is you're making it harder to exit long term if you're incorrect. That's all it is doing. If you get into this and you're out of it by Wednesday evening, it will not make a iota of difference. If you get into this today and it's down here Wednesday morning, it's not going to cost you a penny. Wednesday evening, your broker will charge you to hold it overnight. So do what you like with it today, but if it does this and then Wednesday does that, and then it does this again for the next week and a half, that's going to add up to quite a lot of money, which means that your average price shown on the chart when you get back to it won't actually be break even, it will be a loss. Which means that if the exit target you have is here, that's your break even price. When you get to that, you may close the whole lot out and get a break even on the trade, having held it for 3 weeks. That's all that is going to happen to you. It's not the end of the world if you go against the swaps. But, you know, look at the cost of it. It's even going long, it's still going to cost me $4.60 to long it. This is why I'm not trading the pound New Zealand at the moment, because my broker is charging me $9.60 to long it and $8.10 to short it. Doesn't matter what I do, it's expensive. But look at the price action. If that low breaks where we are right now, what you should do, right? If you're undecided whether to get into this, drop down M15. You're just about to get a reversal alert on this. Look. No, you've had a reversal alert, didn't we? Draw properly. Right, so you got a 3-bar reversal, MA cross, moving average, confirmation, and retest. Hit the short button now, stick a stop loss above there, and don't worry about swaps. This is either going to work out and it's going to break these lows and it's going to collapse, or it's not. That's what's going to happen today. Likelihood is it probably will drop. No more RSI. Yeah, it's down here. Still trading RSI. Mean reversion. Yeah, 100%. What indicator are you using to show the swaps? That's part of the position trader EA. This one. So you got swaps in there. So on the position trader EA and on the zone trader EA, they both show you the swaps on the chart. So they're part of the EA. So position trader or zone, they both do it. So basically, anything, if you're trading intraday, doesn't matter. Swaps do not come into it. If you're an intraday trader, like stock indices, couldn't give a monkeys. The cost of trading stock indices, which I haven't got on this account, cost of trading stock indices is extremely expensive if you want to long them. I haven't got the swaps. Let's have a look at the global prime account. So if I long the S&P 500, it cost me $667 to hold it. If I short it, they pay me. Of course, they're going to pay me to short the indices because they go up. So yeah, if you're trading intraday though, I don't hold intraday. Therefore, I never pay a swap. It doesn't come into the equation at all. So you only need to worry about swaps if you are swing trading, long-term position trading. Other than that, it doesn't matter at all. Even if you're holding intra-week. So if you're trading a strategy where you're in and out within a week, so short-term hold strategies, you don't need to worry about swaps because you're only going to pay them on a Wednesday. It doesn't become expensive. And if you're scaling in and out, so with the ADR reversal strategy, one of the variations is a Friday exit, so you don't weekend hold. That one you don't need to worry about swaps. Any thoughts on crypto trading? No, don't trade it. It's the same as the stock index. Go and look at Bitcoin, go and look at the S&P 500. They're correlated, so just trade stocks, stock indices. Unless you can explain to me in detail who invented crypto, why it moves, how it's manipulated, because it's not the banks doing it. So unless you can tell me who's moving it up and down, as far as I'm concerned, I'm not interested. I know how this moves. I know why this moves. I know why Forex moves. I know how Forex moves. I don't know how crypto moves, and I don't know why crypto moves. So if I can't understand how it works, how can I trade it? Because I might as well just flip a coin and press buy or sell. That's not a very good strategy, is it? But no one has so far managed to explain to me how crypto is manipulated, how it works, who is manipulating it. As far as I'm concerned, Elon Musk is the Japanese guy who created, or the Chinese guy who created Bitcoin years and years ago, and he manipulates the entire market using an algorithm. Unless you can prove otherwise to me, I'm not touching it with a barge pole, because it's not the banks. Yeah, I know who moves this. I know why this moves. I understand the economics and the fundamentals behind FX. I understand the stock market. I understand why the stock market works. I understand why it's bull. I understand everything about it. But I do not understand crypto, and I do not understand it, and no one hasn't managed to explain it to me. Everyone's got a conspiracy theory about it, but I'm not interested in conspiracy theories. I'm interested in facts. Yeah. It's like crypto trading to me is like ICT. Yeah. It's proven bullshit, proven lies, yet there are still a load of idiots following it for some reason. I don't know why they do it, but they do. And they're all losing an absolute fortune. But I also, 5 years ago, could have gone, what's crypto? I think I'll buy some of that, and then forgotten about it for 2 years and be a multi-billionaire. But that doesn't make me any good at trading, does it? It makes me go, oh, what's that? I'll buy some of that, forget about it, and make millions. Because that's what's happened, isn't it? If you bought crypto 5 years ago, well done. If you didn't, unlucky. I don't think Lee is a Trump fan. God, are there any? Who can be a Trump fan? The guy's an idiot. Prove me wrong. No one can. The only people that are Trump fans are 50% of Americans. What's the best anti-black swan method to use for people using big capital? I don't know. I wouldn't worry about black swans, Yusuf. How many have you seen? How many black swans have you seen? I've been trading for nearly 2 decades and I've seen one in 2 decades. So I wouldn't worry about it. There's been, I mean, it depends what you class a black swan as. You know, it's a discretionary terminology, isn't it? A black swan for me is something that crashes a market to a degree that makes you go bankrupt. There has only ever been one, which was a Swiss franc peg removal in 2004. Other than that, there hasn't been a black swan. We've had COVID, but that's not a black swan. We've had a stock market bear market, but it recovered. Liz Truss crashed the pound for a week, but that's not a black swan. Yeah, you look at it's this classification of a black swan. Yeah. So this here, right? This is Liz Truss. Right, this is a normal day. That's a normal day. This sort of size is a normal day. Yeah. That is 48 hours. That is roughly a week. That's not a black swan. That is a, what the hell happened there? That's not a black swan. Some people will go, that's a black swan. How do you survive it? Well, if you died in that, you're an idiot because you're over leveraged. Yeah. Nobody could not survive. I traded through this. I didn't die. I'm still here. Didn't lose any money. It went down for 2 days because events like this and Trump. Yeah, look, we just had a black swan. Some people will call this. Some people go away. Go away. Some people will call the Canadian tariff announcement a black swan. We have to get US dollar CAD, really, don't we? Yeah, some people call that a black swan. It's not a black swan. It's Trump being an idiot. COVID. It's not a black swan. It lasted 2 weeks. The war in Ukraine. No, actually, that's COVID, isn't it? But it's all. These are all fixed, yeah. A true black swan, to me, is that. Nobody survived that. Not one person survived that. My broker didn't survive that. My broker went bankrupt. That's a black swan. That's the only one we've had. 2014. So don't worry about it. If you are positioned correctly and if you are scaled in correctly, you won't have a problem. If you're going to lose money, don't get me wrong. Yeah, you're not going to not lose money in it. Well, I don't know. It depends what you do, doesn't it? This is the thing. Like here, for example, we had 5 down days. It's a V-shaped recovery. Yeah. So if you know what's coming after this, you'll be okay. And that's what happens 99% of the time. What about extreme squeezes? Well, that's just normal, isn't it? An extreme squeeze is an extreme squeeze. What do you do in an extreme squeeze? Scale out. What do you do when you scale out? Take loss. What do you do in trading? Win and lose. It's not anything different, is it? It's just normal market conditions. I took some loss on Friday on the Euro New Zealand because the trade's wrong. It's not even squeezing, but I just want to keep on top of drawdown control. But that's all it is. It's you take losses. An extreme squeeze should not take your account into more than 15% of drawdown, 20% of drawdown max. If it's over that, you're over leveraged. So the worst case scenario when you get an extreme squeeze is you might take your one instrument, an individual instrument may take your account into something like 10, 15% of drawdown. Worst case scenario, you go, holy crap, and you lose your entire month's profit, but you're still alive. And they will happen to you 2 to 3 times a year. You will get an extreme squeeze, as you call it. And it's just what happens in the market, because the market will go into an extreme squeeze when there is a fundamental shift in the balance of the fundamentals. So let's try and find one. I suppose you could class that as yeah, I mean that's not a bad example, is it? So September. So you would have got in somewhere around here, long, and you'd have been stuck in it until beginning of December. So that's the beginning of October, end of September, end of October. You've been in that for 6-8 weeks, maybe. But if you didn't take that exit, you got stuck in it for about 3 months. But now you're out. That's trading. That's swing trading. That's position trading without stop losses. If you're using stop losses, though, if you were trying to long this indefinitely, then you're probably in an awful lot of loss, aren't you? I don't know. There's no way to answer these sorts of questions because it's all hypothetical, isn't it? What do I do in an extreme squeeze? Explain the exact matrix I'm in, what my portfolio is like, explain how big the squeeze is, how long it's going to last, what my swap costs are, explain what's going on with the other parts of my portfolio. Are they also in trouble or are they profitable? There's a billion combinations of things that can happen. You can never be ready for any of it. You just have to use risk and keep it at a level that isn't going to bankrupt you. That's all you've got. New Zealand dollar, US dollar. I'm long. What did you want to know, Linus? I've done the analysis on, well, I'll do it again. But crypto is just one aspect of blockchain technology, which is widely being adopted as a future technology. L1 is the coin. L2 is the blockchain apps coming. When you invest in level 1, you're investing in level 2. See? None of that makes any sense. You still haven't explained why it moves and who is moving it. Until I know who is moving it, I cannot trade it. Why has my light just gone off? No, that was a bad squeeze. New Zealand dollar, US dollar. Where? Oh, this one. Right, yeah, okay. Yeah. So yeah, that's a bad squeeze. So you'd have been in it somewhere around here. Yeah. But look, I mean, I was in it, look, here. You can see my trade here, look. Right. So I got in here and I got out here. And then it carried on going. But I could have got out here with much more profit. But I got out there with a profit. But I could have taken a profit there. I could have taken a profit there. So I got in. I went into drawdown for a week, 2 weeks, 3 weeks, and I finally got out with probably a very small profit, maybe break even. But the week after that, I could have got out with a nice profit. I'd have taken a little bit more heat on it. And then it continued to go down. If I hadn't got out of it here, I would have scaled into more size here and got out of it here. If I hadn't got out of it there, I'd have scaled into some more size here and probably would have got out of it there. So yeah, nasty squeeze. But this, this is the thing with position trading, is you're not looking to get out of everything with a profit. People, I think, have a misconception of what position trading or swing trading is. Basically, it's not a way to eliminate loss. It's a way to eliminate being wrong the vast majority of the time, but you are still going to lose money regularly. My P&L has not got no loss in it. It's got loss in it all the time. There's always losers in here. I'm losing money regularly on trades that are wrong. But what I'm not doing is losing money every time I get the timing of every entry incorrect. The timing was wrong. The timing was wrong. The timing was wrong. The timing was wrong. The timing was right. The timing was right. The exit was available. But the reason I got out there on that tiny little move up was because I kept my average close to price. That is the key to position trading. It's making sure that your average price, this green line here, is as close to or within the average daily range of the instrument. Because if the market is going to move 58% of the time within its average daily range, and your average price is within the average daily range, every single day of the week, there's a 58% probability of you exiting with no loss. But it doesn't mean you're right, does it? It means you can exit your position without taking a huge hit on it over and over and over and over and over and over again. That's where people lose money, because they're trying to time the market. I'm going to short it here. You put your stop loss above that high. Your target's down here. It comes up and it stops you out. So you get in short again. You put your stop loss above the high. Market moves down, it pushes up and it stops you out. You get in short again and the market goes your way. By the time you get down to here and take profit on that, you may well have just paid for the 2 losses you've had, but you have not made any money, because your strike rate in this particular case is 33%. So you've got to make a 3R return on a 33% strike rate to break even. For the market to move 3R, it has to do more than its average daily range, which 58% of the time it's not going to give you. So the odds of using a stop loss and actually making a profit using a risk-reward ratio are stacked against you, because on average the market doesn't move far enough for you to take a profit. This is the maths that people don't get. This is why the banks and institutions don't do that, because if they did, they would have a negative equity. This wouldn't work. But every system and strategy on the planet is trying to teach you they have the thing that has the high strike rate, which gets you in at exactly the right point as the market's about to turn. It's 50-50. Every single candlestick has a 50-50 probability of going up or down. And the distance it's going to move is determined by the average movement of the instrument on a daily basis. And if your target is 200 ADR, when you go short, good luck, because you're only going to reach that 3% of the time. So you might have a lovely 3R risk reward on your trade, but if the target is 3% of the time going to get hit, you ain't going to make money. That's all we've done, is we've eliminated the idiot factor of assuming you know where this thing's going. You don't. The banks don't know where it's going. So why are you going to know where it's going? You're not. So you remove the reason you lose and you will end up just winning. But the downside to it is you're going to have to wait. When you're wrong, you're going to have to wait, which means that you're going to take drawdown on your account. This is the thing that we're told is not acceptable. Oh my God, he's sitting at 11% of drawdown. Yes, I'm waiting for this to become 11% of profit. When you put a pie in the oven, does it cook within 5 minutes or does it take half an hour to an hour? If you put it in the oven and pull it out after 5 minutes expecting it to be done, you're not going to have much luck, are you? It's going to taste like crap. You have to wait. When you press the sell button on something and it doesn't immediately go to where you wanted it to, that's fine. It never does. If it did that every time, we'd be billionaires. We're not. You wait. And if it doesn't work out, take another trade and move your price to somewhere more acceptable. And then the next day you could have got out with a bit of profit if you wanted to, but I decided to wait. And I took another one and I moved my price to another level. And then when it collapsed, I took all the money away. But it's not going to stop you losing money. Yeah. And in a squeeze, it's going to hurt. But you can't have it both ways. You can't do the job where you work 2 hours a day and earn 100 grand a year. You have to do the job where you work 10 hours a day for 100 grand a year. Yeah. If you want the job where you don't have to think, it's going to pay you 20 grand a year. Everything is relative, and this is no different, is it? It's the same. The old dash displays max DD today. It doesn't matter. I don't need max DD today, Mumo. It's irrelevant. No, it's not going into the portfolio. It's no point. It's not a, why you're the only person I think that's ever used it. I never had it turned on. My maximum drawdown today is irrelevant, isn't it? If you want to know what it is, though, you can get that data in the Position Trader EA. So the Position Trader EA exports data day by day, so you can see your max drawdown day by day, and it's all stored in the spreadsheet, which is exported by the Position Trader EA. But how does my maximum drawdown today affect my decision-making process on my portfolio? It doesn't. It's got nothing to do with it. It's just irrelevant information. Morning, Ploughman. Right, that's all I've got for today. This is the most frustrating strategy on the planet. This was sitting in $300 or $400 of profit this morning. As much as I know this edge works, it's done 100% this last 5 weeks. It is the most frustrating thing to watch. This is why I hate stop loss based strategies. Look at that beautiful profit. Look at that beautiful profit. Stopped out. Huge amount of profit. God, it's annoying. This is high on my priority list to get done. This ORB V2 EA, because I've just got to figure out a way to do the testing on this properly, and I can't do it because I can't figure out a way to get back testing and optimization done on this in the way that I want to do it. I think I've got to forward test this somehow live. So for those of you that aren't in the member streams, this is the version 2 of the opening range breakout strategy, which I've been developing based on the Swiss National Institute's analysis of ORB. And I've done a variation of it, which is not taking volume into account, but taking volume range into account in my case. And it's got a fantastic edge in the back tester. It's huge. But it does stupid things like this every day. And I've been watching this every day turn winning days into break-even days or winning days into small losing days after being up 11% and stuff like that. And like today, we were up this morning probably 5%, and it's turned it into a losing day because it didn't take the profit. And I've got to basically figure out a way of minimizing these days. I had one on Friday as well. This was also a profitable day. I know how to do it. I've just got to figure out how to build the logic into it. And the trouble I've got is I can't test it because you cannot backtest what I need this to do. It's just not possible to do because you can't backtest multiple instruments at the same time using overall P&L and all that sort of stuff. It's just what I want it to do. I can't get it to do. So I'm going to have to forward test this, I think, which is doable, but annoying. It's just frustrating seeing it happen again today. But anyway, this is going to be a real game changer for prop. And this is what I used to pass the last evaluation on Top Step, this strategy. It's brilliant when it works. But on prop, because I was using it, I was doing what I want this to do on an automated basis myself, which is why I passed. Because you've got to have different targets set dependent on what's happened the previous day and what's happened in each session. So it's got to have session-based targets, basically. and session-based targets will be based on previous days' results, which is based on previous days' results, and it's kind of a knock-on effect. If you've got what I'm trying to explain in a really bad way is, if you've had a good day and banked 2k, for example, the next day, if you've had a good day and you get up to, say, £1,000 in profit because you've just had a good day and you get another good day, you need different logic this day to the logic you used that day, because you're ahead for the week. And the idea of trading is to make money consistently on a weekly and monthly basis. Yeah, days are going to be good and bad. If you've had a negative 2k day, the logic you use the next day needs to be different. It needs to try and recoup a percentage of this while also using common sense, if you like. And every single day I want different logic based on previous day's results and this morning's session results, and whether I'm in the DAX with the FTSE or whether I'm in the DAX on its own and the FTSE hasn't taken trades. The logic's got to be different because every single scenario is going to be different. I guess I'm trying to replicate myself, which is obviously not very easy to do when you're trying to build logic into an EA. But these days, that's pointless. I got a 15% deficit to make up from Friday. Yeah. So when you get into 5% profit, you need to protect this today to make sure that you don't create another 13 to 15% deficit in this session. It didn't do that. It should have done that. It should have been recouping this loss. So annoying. Even though this is just a demo account, it's annoying to me because look what's happening. Yeah, if this now screams down to target, which is not far away at all, easily within half an ADR, that shouldn't have happened, should it? Anyway, I'm working on that. ORB V2 doesn't hedge? No, ORB doesn't hedge either, does it? Opening range breakout strategy is not a hedge strategy. It's a stop loss based strategy. But this just trades it in a different way. It uses different logic, but similar, very similar. It's kind of a scaled down version of ORB. ORB EA is fantastic. It works very, very well, but some days it's too aggressive. So what I'm trying to do is I'm trying to develop an EA that is using all the best bits of the logic from the SIH EA and from the ORB EA, and I'm trying to combine it into one EA that is using the best elements of it. So the problem with ORB is if you use continuous mode on incredibly range bound days, it makes too much loss, but you can cap that loss. SIH doesn't do that, and it limits the amount of loss you can take because it hedges and it waits for the market to then move and try and gets out of it. The downside to that one is if it doesn't get out of it, you need to re-hedge it. If you don't re-hedge it, it makes a big loss. So they've both got elements where they will both absolutely kill it on momentum breakout days, which is what the strategy is. It's a momentum breakout strategy. So it's not meant to make money in range bound markets. It's not meant to make money in parabolic markets. But obviously if it breaks cleanly, it makes money in parabolic markets. But there's good and bad elements about both of them. So what I'm trying to do is amalgamate them into one kind of master EA that takes into account all of the stuff that happens. And we know that there's only 3 things that really happen in markets on the stock indices at the open. So it's just a case of trying to fine tune the logic. So if this breaks long today, the DAX, so, you know, this is not over yet today because we've still got 2 trades left. This has still got 2 shots left to fire. We've got a long on the DAX to go yet. So if this now pulls up to here, pulls back and then breaks long and breaks out into target, that's done. We're back to break even. If the FTSE does the same thing, yeah, we've also got a break even. So if we break... So we've already broken Friday's high. We actually opened at Friday's high today. Yeah, so if we're going to go bull today, we're going to break the pre-market highs and run up to there. It's going to be a profitable day. But if this morning had been a clean break to 7%, for example, and we closed out at 7%, these should not happen, these trades, because these are opportunities to lose today's profit, aren't they? So it needs to be clever enough. The logic needs to be clever enough to know what to do, which orders to take, whether to use them, go for them or not go for them, based on today's session profit, yesterday's session profit, and the previous day's session profit, as to how close that is getting us to our weekly targets that we want to achieve as a minimum. And it needs to make different logic decisions based on all of that. So there's a hell of a lot of thinking it needs to be able to do, which is what I would do. Yeah, if I'm sitting on a week where I've banked $5.5 grand by Wednesday, Thursday and Friday for me are just super low risk. I'm not going to give that money away. If I have a Thursday, Friday range bound session, I'm going to give half of that back, or maybe all of it back. So it needs to make a different decision on a Thursday based on what Monday, Tuesday, Wednesday's been. Yeah, so it's building this logic in, which is what I'm doing with this EA, but it's incredibly difficult to backtest it because you can't backtest a portfolio. So ORB VT, I'll answer that one. Position trader EA only long on indices would be doing enough money. Yeah, test it. I can't do it on there because I haven't got indices. So 1.63. God, we're on 2.1. That's a really old version. I haven't got it. I haven't got indices on this account. I can't test it. But yeah. I mean, if you position trader EA on indices, the downside to indices is you've yes, it will work. If you go to, I need to do a video on this really, don't I? If you go to the market reverse alerts manual, or is it the starter? Yeah. So this blog post is the S&P 500 15-minute scalping strategy with the market reversal alert CA. You can use the same thing, but all you do is forget the moving averages. You don't need anything to do with moving averages with the strategy. All you're doing is every time on either the hourly chart or the 4-hourly chart, when you get an RSI extension to the downside, and you can pick an RSI, it doesn't matter which one you use, just use an RSI, and when it gets extended, start a long position. If you continuously do that on the S&P 500 and then you exit after 1 or 2 ADR of movement, it will generate profit. Yeah. The only time it won't is in 2021-22 bear market. It will make a loss, and it won't be a massive loss because there are still, when that market was in bear, we looked at it this morning, there's still rallies within the bear market which will exit your positions. So yeah, you can definitely make money with the market reverse alerts EA or the position trader EA, but it's long term. The downside is the swaps. Yeah. So the longer you hold it, the more expensive it becomes, because swaps on the S&P are expensive. Broker, you're going to be paying on all of the indices. It doesn't matter which index you're trading. Swap longs cost money because they go up. So yeah, you can do that, definitely. Test it. Go and stick it in the back tester. I was thinking of doing this to add 1 to 3% each month with indices, but I cannot backtest because Robo Forex data on indices is only for a few months. We don't use Robo Forex data, use tick data. Always use tick data. Never ever use your broker data for backtesting. Never. Use tick data. Don't trust your broker's data. It's probably fine, but you won't have enough of it and it's not accurate enough. So always use tick data. Tick data suite. Yeah, that's what you want to use for MT4. So use tick data suite, and you'll always have accurate data. But actually, to be fair, it doesn't matter too much with that type of strategy, because you're not trading tick level. You're trading hourly and 4-hourly charts. So if the difference on a 4-hourly RSI is there and there, it's not going to make a lot of difference profitability-wise. So yeah, I mean, setting up an account, but that is an investment account. That's what I used to do. The reason this strategy is here on the site is because this is the strategy I ran pre-COVID. This was my pension fund strategy. It's the same as Warren Buffett's, basically. I haven't made this up. This is Warren Buffett, right? Warren Buffett buys the dips in the S&P 500. That's how he became a billionaire. That's why he is a billionaire, and that's why he will remain a billionaire, because he understands how the markets work. Yeah, it's not a strategy. He's not clever. He waits for the market to go up because the market's engineered to go up. It's like a car, right? If you were to bet on a car going sideways, you would lose money, because all it can do is go up and down, forwards and backwards, right? Warren Buffett's not an idiot. He's seen stock markets go up for a century, every year, by an average of 8%. So if you have a load of money and you see something happening for almost a century, like clockwork, to the tune of 8% a month, and you extrapolate away to magnify the 8% to a larger amount by not doing it once, but doing it twice, all of a sudden you have a 16% profit. Now, if you added a third onto that, holy crap, you're at 24% on the year. That's all he does. It's not rocket science. It's just what indices do. Every now and again, you'll get a bear year. Every decade or so, it'll go bear. But the amount of money you'll make in bull, as long as you're not betting your entire life, you will not lose it, because that's all they do. Stock markets go up. Yeah, if they went down, the board would be fired. And do you know what happens when the board gets fired? They get replaced by a board that makes it go up. And do you know what happens if your company isn't big enough to be in the S&P 500 anymore and you drop to 501? 501 comes up into position 500 and replaces you. Why? Because their stock price is going up. Therefore, this has to go up, because the companies that make it go down get replaced by companies that make it go up. It's not rocket science. This only goes up. So you buy it when it's coming down, and you keep buying it while it's coming down until it goes up, because it can't not go up. And if it doesn't, there's a massive problem, and your wealth is worthless anyway, because if this thing doesn't go up anymore, the world's gone wrong. Because it means economy, a business, no longer is the driving force of money making. And if that suddenly becomes not the driving force of money making, you don't need money anymore, because it's a zombie apocalypse, and the thing you need is a baseball bat wrapped up with barbed wire. That's it. That's the rule of economics. If the stock market's not going up, get a baseball bat. Or if you're in America, open up your dugout under your house with all the guns and survival gear. Been watching too much Last of Us. ORB Bootcamp. You don't need a bootcamp for ORB. It's on the website. Strategies. All you need to know. Can't teach you any more than that. It's a momentum breakout strategy. If there's a momentum at the open, it breaks out. If it breaks out, it goes to a point in time where it reverses. You get on that breakout and you take profit before it comes back the other way. I can't tell you when that's going to be, because there is no way of determining it. So it's literally, that's it. That teaches you the strategy. There's an EA that automates that strategy. There's a hedging EA that will do a hedge variation of that strategy, but there's no right or wrong, because you don't know what it's going to do. Can MT5 backtest a portfolio of pairs? Yeah, so MT5, you can do backtests on multiple instruments at the same time. So that's what I'm doing. I'm rebuilding the EA in MT5 at the moment to take advantage of that. But it's still going to be quite difficult to to do as a back test, because you don't get the individual results very well displayed for every single instrument that it takes the trades on. So you've got to get the data out, you've got to squeeze it into something like Quant Analyzer to do the analysis, then you've got to fine tune it, then you've got to put it back in, then you've got to rerun it. So you can't, there's no software out there that can do an optimization, if you like. So what I would like to do is a system parameter permutation test on 5 instruments traded on the same day with the EA in the strategy tester, and I want you to extract all that data and do an optimization based on all 5 of those across every single day. It's just not doable. There's nothing that does it. So the MT5 version of the strategy tester is as close as I can get, but it still won't do what I want it to do properly. So it will run a back test for me in MT5. So, oh, that's the wrong one. That's MT5, yeah. Oh my God. So in the strategy tester in here, you can say test all market watch symbols. Yeah. But that will run the settings on all of those. Yeah. So with my EA, where I get it to say open up a trade on 4 different instruments, I can run it on the DAX, for example, whatever, and it will automatically trade the other indices. But what I can't do is I can't run a system parameter permutation test. I can't run an optimization test on what is the best thing to do with each of those symbols at the same time. That's the thing it can't do. Yeah. So it's just not the software's not there, but I don't actually blame them for what they've done, because it's something that really you just don't need to do normally. So it's got to be a manual process, which is why I'm thinking forward testing is the best way to do this. It might be that it can't do it. It might be what I'm trying to do is just ridiculous and you can't do it. And it's something you need to do as a human being, which is fine. And if that's the case, then that's what I'll do. And then in that case, then you just need the EA to do what it's doing at the moment, which is trigger the trades for you. And I manually watch this, and I just need to build a close button into it and say, shut that, or a break even button and shut that, break even that, and, you know, do it manually. I guess which is what I do anyway. So I'm probably trying to find the holy grail when it doesn't exist, but it's good fun trying. Been running SIH on selected FX pairs during volatile sessions. Very interesting results. Yeah, lots of people have done that. An option for time-based ranges on SIH would be useful. It already does, Mumo. I don't know what you're talking about. There is an option for time-based ranges. It's all it does. Trading times. There's your time-based ranges. You just set it to whatever you want it to be. And if you want 3, set up 3 versions of the EA, different magic numbers. And you can trade different ranges on the same pair. Already does that. But we had a guy, Brian, who used to come into the live rooms from America, I think. And he did what ranges it was. I think it was the first hour of the UK session. So basically it was like the Asian range breakout strategy, which obviously doesn't work either. But it was a kind of a variation of the Asian range breakout strategy. But the problem with it was it would have these days where it would kill it, and then it would have days where it would die. And overall long-term edge wasn't there because it was a stop-loss based risk-reward strategy. With SIH, obviously, if you're hedging a range, you've got to work out where to get out. So it's just a case of you're trading the same strategy, but there's no open. The problem you'll have, Mumo, with it is, and this is what we came to the conclusion of when we were testing this with Brian, there is no time of day on Forex where the market takes off. Yeah, the market does not have an open in Forex. Forex is 24/5, basically. So you can look at any Forex chart and say, I'm just trying to think. Right, so for me on this day, on Friday, the market took off at midnight. Didn't stop, did it? Yeah, so on Friday, midnight was the time you wanted to go. That was where the market took off on Thursday. That is where the market took off on Wednesday. And that is where the market took off on Tuesday. So that time is different to that time, which is different to that time, which is different to that time. So you cannot set a time-based range on Forex because there is no such thing as a time-based open on Forex. The stock indices open at 8 a.m. and 9:30. Every day, have done for life, never will do anything different. Forex opens at midnight, and at some point during the day, one of the banks or institutions will drive enough volume through the market to cause a breakout. You don't know what time they're pressing that button. So therefore, you cannot specify a range. So you need something dynamic, and we built this EA in the past. I've still got it somewhere. I might revisit it at some point. Which is basically an EA that monitors range, and it will pick a contracted range when it finds a contracted range, and then it will use that to take a breakout. But the problem with that is 80% of breakouts fail. So it ends up being a negative profit generating strategy because 80% of your breakouts are going to fail. The reason 80% of them will fail is because there isn't a specific time when you know the volume's coming. This is why ORB and SIH have an edge, because we know at 8 a.m. that's when the volume's coming, and we know at 9:30 a.m. in New York that's when the volume's coming. In Forex, we don't know what time it's coming. So therefore, where do you put the time? Where's your range break? So people go, oh, I'm going to pick the Asian range. When's the Asian range end? 8 a.m. Does it? I got a friend in a bank. He doesn't start until 8:30. So how can he be trading at 8? Some people say 9. Some people say 7 a.m. Is that chart time or broker time or UK time or HSBC time or Barclays time? You know, there's just no way of determining this. It's a random thing. It will take off at random based on volume when a bank presses a button at some point in a 24-hour period. So again, I dumped all this years ago as a strategy because it's not executable in any way, shape, or form that you can reliably backtest, because there's no time-based edge you can select, unfortunately. I'd love it if it were, if it was a case of at 8 a.m. This is why, again, I keep going on about ICT. I've been for years, but ICT kill zones, bullshit. There's no such thing as a kill zone in Forex. Yes, the market will move more in the UK at 8 a.m. to 10 a.m. because the banks are starting to execute the daily orders because people have woken up, had their breakfast and gone into the office. But you can't tell me that this is the time you take those trades, because if it decides it wants to move at 11 o'clock because a large order comes in from Microsoft to execute shorts on the US dollar, it's going to move at 11. So your kill zone theory gets thrown out the window and everyone's sitting there going, oh, it didn't work this morning. No, because it had a 50-50 chance when it did. Just stop worrying about the details. It doesn't matter. You cannot control anything here at all. The only thing we can control from a time-based perspective is stock indices, because every single day of the week at 8 a.m., one of them happens. One of this happens. Lovely long. So we're long the DAX now. There we go. So there you go. P&L's dropping nicely. Well, going down nicely, obviously. So this is the recovery trade today. Target on that is 1986. So if we get that trade on today and it works, we're down 1300. We're going to make 19, so that puts us 600 up for the day. So if we've had a lost recovery morning like this, and if we break long on the FTSE and we also get that to target as well, we'll be sitting on $2 grand, $2.5 grand worth of profit for the morning session. Yeah. So the decision-making process for me as a human being right now is I've just paid this month's mortgage. I'm not going to trade the US session because I've done it. I'm done. But EAs are stupid. So they will go, I think we'll try the Dow and everything else. Yeah. And this afternoon, it will lose 6.5 grand on a range-bound market because we're waiting for news to come out at 3 p.m. And it will lose everything I've made this morning. It needs to be clever enough to go, do you know what? We've had a tough morning. We've taken 3 trades. They've all been losers, or 2 trades, or however many we've taken. 4 trades. We've taken 4 trades this morning. They've all been losers. We managed to get the 15-minute or the 10-minute ORB longs, and they both went to target. Ooh, that was tough. Stop. Yeah, you need that logic, but it's incredibly complex logic because there's a million different variations in there, isn't there? Different combinations of what you could do. And this is where your human element of trading comes in, which is why I say with the SIH, it's not the strategy sort of strategy that you sit there and stick it on autopilot and hope it's going to print you money. It's not. What do we do with FTSE today? It's an absolute mess. It's doing exactly what it should do. Nothing. Just wait and see if the FTSE does something today. If it does something today, we'll deal with it. So for me now, I'm sitting looking at the FTSE going, I need to make an executive decision on this. Where am I going to get out today? 5R to the upside at all-time highs. Let's go with it because it's ADR. Downside, 5R to the downside is just shy of ADR where we had that accumulation break from Friday. So this is where the buyers stepped in on Friday. So yeah, looks like a good exit there. If it wasn't, I'd be adjusting those levels. But you've got to have this human element in it. There's nothing that can do this. AI can adjust things, you know, but it also can look at that high and go, hey, this is where we broke out and every seller here flipped into a buyer. But it still doesn't know when you get to that level if it's going to do that or that because it also cannot see the future. In fact, AI can't even see the last year or so, can it? So it's no use to us from a trading perspective. So again, any AI-based EA you see out there, run a mile because it's working on data from 2 years ago. Not going to help. It's like using a 2-year moving average. What help is that? I know what it was doing 2 years ago. It's not going to help me today, is it? Same as a 200-day moving average. It's not going to help me today. I can see it's been going up for 200 days. I don't need a line to tell me that. But Mumo, what I would say is if you're having success with it, use it, do it. Anything that works, stick with it and keep doing it. But, you know, you backtest, always backtest. It's all about backtesting. That's why we spent so much time in the member streams at the beginning of the member streams. We spent virtually the first 2 weeks at the beginning of the member streams back here in backtesting. Yeah. I kicked off. There's nothing in the member streams for a good couple of weeks apart from the basics, backtesting. Because if you cannot backtest it and get an edge, do not do anything with it live. Because if it doesn't work in backtesting and there's no visible edge in backtesting, it's not going to work in the future. So if you've got an edge which works in backtesting, forward test it. And when you forward test it, like I'm doing here, and it works out and gives you similar results to your back test, you've got an edge. So if you've found an edge that you think is working in FX based on hedging a time period, that's great. Use it and run with it. Because if it's an edge as well that no one else is using, or no one else is using all the time, the reason there's a lot of I had when I was in learning to trade, I spent a lot of time on Forex Factory, as everybody does, absorbing all the crap, basically. But you learn a lot, mainly what doesn't work, which is everything on Forex Factory. But you learn a lot about theory, and you learn a lot about conspiracy theory as well. And that's one thing that is absolutely rife in this industry. I had somebody contact me on Discord a few months ago, basically, and said, you do realize you've destroyed the edge of every single one of your strategies because you've given them out on YouTube. Now, the banks know what your strategy is, so they're just going to do the opposite to your strategy. And I had to look at it for a minute and think, but I do what the banks do. So are you saying the banks are going to have to undo everything they've done for decades to make money and do it a different way because I've told everybody how they do it? But I don't know how they do it because I can't see what the banks are doing. So I went for this long conversation explaining that I don't tell anybody what my strategy is. My strategy is to, when an RSI gets extended, wait for a price action signal to tell me to press a long button. But my strategy doesn't know which way the price is going. So if the banks are trying to get my money away from me, I don't care which way they take it, because if they take it down, I'll add another trade. So you're telling me that every time I go long, the banks go short? Well, they've been doing that for years because it's a 50-50 chance that they're going to do one of those two things. Doesn't make any sense, does it? All the stop loss based strategies that people come up with they always get, well, you've told the banks now what's going to happen, so they will build an algorithm to hunt you. They don't even know you exist. They don't know Forex Factory exists. There's so many conspiracy theories out there about it. But if you're doing something that no one else is doing, there's a good chance it works because it's different. Because everybody out there that's trying to trade is doing the same, trying to do the same thing. They're trying to base an entry using a losing order on a risk-reward based profit mechanism, and they are trying to time price. If you're using something that gets into the market at an illogical period of time because there is no open, so if you're setting a time period, you're basically picking a random thing and saying break out of a random thing. No one else is doing that. It's probably going to work because no one else is doing it that way. Because the market moves in a rhythm, market structure. And everybody tries to predict market structure, but market structure is random. Therefore, everyone is trying to predict random movement of the market. You can't do it. So I always say, run with it. If it's working, use it. And it doesn't matter how ridiculous it is. It could be based on moon cycles. No one else is doing it. Well, there's a lot of Chinese people that use, lucky number sevens, and I'll only trade on the seventh hour of the 7th day of the 7th month, and that is when I make the most of my money. I have done for the last 3 years. It's a 50-50 chance it'll happen again next year as well, mate. When you press that button, it's going up or down. Anyway, I'm waffling now, aren't I? I've got to get on with some programming stuff. So anything you need, let me know. I will be in Discord. Hedge exit today on the FTSE is going to be up at ADR and down at ADR, basically. So just looking for movement. Nice break on the DAX. Weekly level just about to get tested as well. Last week's high. See if we can blow that. We're actually almost at ADR, look. See if we can blow through that level. Yeah, so just quickly to explain another logic I'm thinking here. We've just recovered 3/4 of losses today. And I've got a shot left long on the FTSE. Should we go, right, let's minimize today's loss down to $400 and hope we get a long break on the FTSE, and then we'll wait for that to get back to break even, reset for the morning. Excellent. We've not lost any money this morning. Let's trade the afternoon session. Or should we let this go? You see what I mean about the decision-making process? To build logic now is basically, what are you thinking? What are you thinking you should do? You've got two options. Let it run or shut it. this is the difficulty with building EA logic and building EA strategy, because there's a billion ways to look at this today. The only reason I'm questioning holding this now is because I've just flicked over to another platform which happens to have a black line on it, which happens to be the high of the week, and I'm seeing almost an ADR movement to the upside after a massive hour-long push into a weekly high where sellers are going to be sitting. That's completely changed my outlook and decision-making process on the DAX. But the reason is not to do with what I saw on what I was on. It's because I switched to this platform and saw a black line on a chart. That's how unique trading is for every trader. The decision-making process I'm making now, and you're probably making because of what I'm doing right now, is completely different to what it was 10 minutes ago because of a black line. How do you build logic and strategy around that? I'll leave you to think about that one. Right, I'm off. Bye-bye. I'll be back tomorrow. Members stream tomorrow morning. So if you're in the members streams, I'll be back at 8 o'clock tomorrow morning. If not, Wednesday afternoon, we'll be back, and we're going to look at the US indices Wednesday afternoon. Have a look at the week so far. Wednesday morning, we've got the first two news events of the week. So obviously Wednesday afternoon, we'll be getting ready to trade through PMIs, and we'll obviously have a look at what's happened this week so far. Keep your eyes peeled on Discord. I will post in Discord if anything happens over the Trump side of things, but at the moment markets seem very scared and very unsure as to what to do. So could be one of those weird weeks this week, but I will post in Discord if anything looks dicey, and you kind of got to be ready to jump ship on stuff, unfortunately, when you got situations like this, because if there is an announcement that looks like it could be something catastrophic from a financial perspective for any country, you kind of are better being flat than hoping, as we saw with things like Liz Truss. We could easily have a 4 or 5 ADR move for 2 days back to back if suddenly Trump decides to pull out of NATO, for example. It's going to massively affect everything. So just be aware of all of that that's going on at the moment. Don't base everything on technical analysis, because it's not that type of world anymore. All right, so have a good day. I'll be back tomorrow morning. If not, back Wednesday afternoon, and I will see you then. Have a good day.